Market Outlook, Calendar Week 46. The previous week confirmed our scenario: weak risk appetite and brief counter moves that were quickly sold off. In CW45, Quantum deliberately issued no research signals to avoid unnecessary drawdowns and preserve room for cleaner setups. In parallel, sensational crash narratives circulated in the media. Our assessment remains sober. Market structure is vulnerable, but panic is not a strategy. Direction emerges from liquidity, the inflation path, and the reaction of yields, not from headlines. In digital assets, BTC continues to dominate. Dominance sits around 60%, with capital parked in core beta. Altcoins respond selectively to project-specific drivers, show over beta in both directions, and frequently revert to mean after spikes. Sentiment, extreme fear, is jumpy. Around data windows, headline impulses amplify swings. The result is a lack of market breadth and fragile trend attempts outside of BTC. For CW46, the focus is a tightly packed macro agenda. Midweek, Eurozone industrial production will signal the state of demand and capacity and primarily shape European sentiment. On Thursday, UK GDP, monthly and Q3 first estimate follows. Through the path and tone of gilt yields, it can influence global risk appetite. Also on Thursday, US CPI for October arrives, traditionally the week's strongest metronome because it moves the USD, real yields, and rate volatility. Parallel activity data from China, industry and retail will shape the Asia session. On Friday, US PPI completes the inflation picture, either confirming or correcting the CPI impulse. Recent crash rhetoric draws from three sources. Tighter financing conditions weigh on valuation imagination. Market breadth is thin, and long-tail liquidity is fragile. Key impulses are time compressed, so surprises can trigger cascades. That does not imply an inevitable drop, but rather a heavier-tailed distribution. First reactions become larger, slippage risks rise, and sustainability depends more on follow-through liquidity than on the headline itself. In terms of correlation, BTC almost always leads the first reaction to CPI, PPI because USD yields determine the global price of risk. ETH follows with higher sentiment beta. Alts amplify moves as long as the market is surprised, but quickly lose momentum once the initial impulse dissolves into order flow noise. Without declining BTC dominance and easing rate volatility, genuine breadth remains unlikely. Project-driven outliers do little to change this. The token context plays a secondary role this week. Individual unlocks can create idiosyncratic volatility, but the inflation block defines overall direction. Practically, project-specific news can reinforce moves, yet remain secondary, as long as the dollar trajectory dictates the bigger picture. Our outlook remains strictly data-driven. A moderate CPI, confirmed by PPI, could dampen rate volatility and soften the dollar. Risk assets would get breathing room and rebounds could become more than purely technical. A hot CPI would lift real yields, sharpen the restrictive tone, and leave digital assets exposed to fast, less sustainable counter moves. In both cases, market breadth is the decisive validation step. Only when capital rotates out of BTC into the broader market do opportunities emerge beyond core beta. Quantum's approach in CW46 reflects this. In the first minutes around CPI, PPI, we reduce or disable automated execution to control slippage and avoid impulse-driven misfills. Entries occur only after confirmed market absorption via structure, volume, and flow. Stops remain tight, position sizes align with real liquidity, and illiquid alts are handled with particular caution. Preferred setups are swing and mean reversion with clear invalidation. In whipsaw phases, the cadence stays low. Quality over frequency, discipline over actionism. Conclusion: volume does not replace mechanics. Direction emerges when structure, price, and timing align. Until then, we protect capital, wait for confirmation, and act only where the risk-reward speaks clearly. Quantum remains focused, rule-based, and ready to react, without romanticizing the market and without cultivating fear. This text is not investment advice and does not constitute an offer to buy or sell digital assets. Research signals, where activated, serve exclusively informational and research purposes and may be adjusted, delayed, or suspended depending on market conditions. Quantum data analytics, analytical, strategic, innovative,